glance at this, guys, what can we notice? Do we see any price patterns in here? Do we see any price patterns, guys?
Right, good morning then, folks, on Tuesday, the 25th of July. We're stuck in the markets today on sort of my Monday for the week. I was away the weekend. I only got back yesterday evening, so first day of the week for me. Doesn't seem like I missed too much yesterday, but what we did have yesterday was a bit of a rally in the price of oil. Now that goes in line with recent trade. You know, oil's been up for 4 straight weeks in a row now. Also, the inventories out of the US on a Wednesday have been lower for 4 straight weeks. So tighter supply. You also have to take into consideration that Saudi Arabia, Russia, OPEC Plus are doing cuts to production of oil. Obviously, that then tightens the supply of oil. Couple that with some headlines out from China that we have had, or that they have had a meeting. A widely anticipated meeting from China discussing different measures that they can take to prop up the different sectors of their economy. Obviously, an economy that has been struggling ever since their post-COVID lockdown. They're opening from those COVID lockdowns. So since they've got out of them, the economy has not grown in the way the markets would have anticipated. Has been a slight dent on global growth, I mean, to a certain extent. And the more support they lend to their economy, the more positive it is seen for their economy. Obviously, the second largest consumer of oil, that is then seen as a positive for the price of oil. So current demand outweighs future supply. That's a reason for some oil upside, and you have to imagine that probably continues moving forward. And if that does continue moving forward, well, that continues to put upwards pressure on inflation. The higher oil goes, the higher inflation goes, the more of an issue it becomes for the central banks to deal with. So that's something we need to keep an eye on going forward. Does oil continue to rise? If oil does continue to rise, it continues to put pressure on inflation and continues to put pressure on global banks. Apart from that, I wouldn't read too much into Australian New Zealand dollar struggle with global growth concerns. The one strengthened on Tuesday after China's top leaders pledged to step up policy support for the country's flailing economy. The Australian dollar and the Kiwi dollar are higher off the back of that, which is why you got to be careful with these websites sometimes. Obviously, this one was about an hour ago. This one was about 5 hours ago. Obviously, things can change in the space of 5 hours. So, Australian dollar, Kiwi dollar up off the back of that. Australian dollar seen as a liquid proxy for the Chinese yuan, so people will trade that due to the heavy trade links between the two nations. Apart from that, really, we're looking forward to the Fed tomorrow, and obviously earnings as we rattle on throughout the course of the week. But we'll update on those a little bit later on in the week. We'll update on the Fed tomorrow, and we'll update on earnings a little bit later on today, as they will mainly be out in the afternoon. Apart from that, with some downside, pretty solid downside yesterday on the euro off the back of this manufacturing PMI, extremely weak print. Consensus is for 41, 38.8. Like, in terms of where that is historically, it's the lowest print since the COVID kind of meltdown, and then apart from that, it's the lowest print since 2008. So now this has been trending lower, as you can see here, all the way through here from 70 now down to 40, and stocks are still rallying. But so that is not a positive development. That was weak in terms of the euro, weak in terms of the DAX. But you look at the DAX, I don't really seem to care too much. So in terms of wrapping your head around stock indexes at the moment over the last number of months, maybe a bit pointless. I think just stay long until something major happens. Markets are kind of spinning that in a way where positive data, well, then that's positive for stocks, and then negative data, it just means the central bank are going to stop hiking interest rates, so just long stocks anyway. So we're definitely in a bull market at the moment. Obviously, we've stated it time and time again, continue to be long, even if it's somewhat dilutedly sometimes. Being on the long side of stocks is a much more profitable trading strategy than being on the short side, kind of regardless of the situation. That's from my experience of trading. That is the way that it works. Apart from that, you've got some more business climate figures out this morning. Now, if that comes in negative as well, the fact that you saw some material downside in the euro off the back of that release yesterday, probably something worth keeping an eye on if you do get around to getting some weak data a little bit later on today. But apart from that, into tomorrow you got some CPI prints from Australia, and then obviously the Fed tomorrow evening. But economic data pretty light across the calendar today. Right, you can see not a great deal of price action across the US dollar pairs. You can see the Aussie and Kiwi popping higher, Euro kind of struggling down here, Cable kind of struggling down here. Both of them have had negative developments over the last week or so. Obviously Euro yesterday, and then inflation out of the UK last week. Dollar Swiss continues to kind of grind higher. Dollar yen a little bit sideways, kind of pulling back really over the course of the last couple of trading sessions. Dollar CAD pretty sideways, and the dollar index just really in line with that euro dollar chart. Yeah, it's something often see across US stock index. You can see the S&P pretty sideways, Dow Jones trending higher, and the Nasdaq trending lower. It's really not a common occurrence across the US stock indexes. But in terms of the different companies and the different stock indexes, I mean, I'm not gonna lie, I don't really look too much into the individual stocks, pay too much attention to them. I'm more kind of concerned about markets as a whole. So earnings season may be a little bit tricky for a week when you got to look at individual stocks and individual stock indexes. So maybe a time where you look towards something else and maybe trade something else. But you've got the DAX then as well. DAX pretty sideways, but you have got, what I do like to see across this is, I mean, you've got higher lows all the way up here. You've got higher lows kind of pushing towards kind of equal highs up here. So I do like that for a bit of a pop to the top side. Even that weak day, the markets don't really seem to care. You do have a pretty decent resistance level all the way up here, as you can see across there. So something I will keep an eye on is that level up there. If you can get up through that, you do have all of your higher lows all the way up through there. So something I will keep an eye on as you head into trade for today's European session. A pop above that should open up some fresh upside. The ideal situation for me would be a break and a retest and then continue on long, but let's see how it plays out on the lower time frames. Potentially looking for a bit of an intraday execution. You don't want to hold too many positions into that Fed tomorrow. We will obviously update more on that as we get into the release tomorrow. Again, we look at yields pushing higher. You can see the 10-year yield through the highs again this morning, which I think is definitely something to note. That is likely to drive dollar yen higher. I don't know what that means for stocks. I don't even know anymore. Last few weeks with the correlation between these, it's kind of broken down slightly. But 10-year yield, 2-year yield continue to trend higher. Oil, obviously we've alluded to oil earlier on in the video, but 10-year yield, 2-year yield continue to push higher. That puts downward pressure on gold, and that is a trade. I think gold is a trade to play off those movements in the yield market. But you can see, I mean, the Nasdaq moving lower with yields moving higher. The Dow Jones moving higher with yields moving higher, and the S&P not paying much attention to it. So maybe something to keep an eye on. That Nasdaq in relation to the yields is correlating pretty nicely at the moment. But Tesla and Netflix both missed on earnings, both disappointed on earnings last week. So that was obviously a contributing factor to the Nasdaq. But just quickly have a flick through the grid. You can see stock index is green across the board. So positivity in markets this morning, albeit not by a massive amount, but positivity in markets this morning. Couple that with commodities up across the board, apart from your Bitcoin. Bond yields higher across the board off the back of expectations for global growth to improve off the back of those Chinese developments. US dollar naturally weakens in that type of environment, and you come to the Aussie and the Kiwi. That then is a situation where they then push higher. So you got stock indexes higher across the board, pushing the Aussie dollar higher. You've got positive developments in relation to China, which again pushes the Aussie dollar higher, which is something I think definitely worth keeping an eye on as we go on through these sessions. If the Australians continue to lend support to the economy, it continues to be a positive for the Australian economy. That is a situation where the Australian dollar enjoys itself. The Japanese yen has had a substantial pullback over the last couple of weeks, but back end of last week did give back a chunk of those gains, and now the yields have turned back higher again. The Japanese yen is back under pressure. Obviously it's the worst performing currency on the year to date. It looks set to continue if bond yields in the US continue higher and continue to contract that the yield curve differential. But apart from that, that's kind of where we're looking at tomorrow. Looking at today, positivity in stock markets this morning. Once there's positivity in stock markets this morning, that is the side of the fence you need to sit on. Oil higher off the back of supply of reducement in supply, potentials for some positive demand from China. At the Australian dollar up higher off the back of China, plus the US equity index futures, or global index futures, should I say. Japanese yen lower off the back of bond yields higher, and it's kind of the way you'd have to play it. Certainly, when there's positivity in markets, that's the side of the fence you need to sit on. So keep an eye on those yields, maybe for some protection. For mixing up my words. Keep an eye on those yields, potentially for some direction on gold. Keep an eye on those stock indexes, potentially for a move higher as there are positivity in markets post China. And oil looks set to continue its move higher. But yeah, that's it for me then. Best of luck with your trading day. A couple of things to keep an eye on, but do be careful, as we do have the Fed tomorrow. Markets can end up being a little bit tricky to trade in the lead up to an event like that.
Of the TPO. I'm going to take off my TPO screen. I'm going to put the session volume profile back on.